Hi there, welcome to GrainTV. It's a Friday edition, January 23rd. We had a mixed day of trade. Wheat and soybeans to the downside, losing 3 cents and 4 cents respectively, while corn managed to buck the trend on a 2-cent advance. Cody, what was sort of the news today?
Well, first of all, I think the big differentiator between corn, soybeans, and wheat is the fact that corn came out with very positive export sales early this morning. You'll notice that we were able to book 2.1 million metric tons of sales. That is twice what the analysts were expecting, so that's very positive. It's a marketing year high, and I think one of the reasons why we were able to really hang in there when you look at the positive price action here for corn. Now, one thing you'll notice is when you look at this chart, what this is showing you is the cumulative sales and the weekly sales, and what you're seeing is the red bars. Notice how they're below that green line. That green line is that seasonal pace, what we would expect to see in terms of sales to meet the USDA expectations. And you can see, notice the red lines are below that green line, and really over the last 4 weeks, we've finally broken up above that green line. We're trending now, we're picking up some pace, right, and it looks as though export sales here are showing some signs of life.
Yeah, and certainly this week, knocking it out of the park here, obviously, getting us up to that blue line, which is last year's total for exports. So that's certainly got to be favorable for the bullish side of the market.
Absolutely, and let's talk a little bit about soybeans, because this is a complete opposite side of the spectrum. Mm-hmm. Soybeans came out with a marketing year lows, about 14,000 metric tons. Analysts were expecting anywhere between 400 and 700,000 metric tons. Very disappointing. Now we are 92% booked, but now the concern here is that we start to see cancellations. We start backtracking on all the progress that we've been able to make. Do you think that that's possible? And do you think that perhaps China, with export sales the way they were this week, do you think perhaps the buying program here in the U.S. is starting to wrap up?
Yeah, I think that's a distinct possibility. Certainly we saw it in the numbers today, with only 14,000 metric tons sold. And certainly last week and this week even, we saw some cancellations by China. So, I think we have to be ready for the prospect of cancellations by China being more prominent as we head through the rest of this marketing year, and that could be detrimental for the bean market.
Absolutely, and keep an eye on this chart here. What you'll notice is that we are way ahead of pace to meet USDA expectations. Red lines are well above that green actual sales the projected sales, what we'd expect to see around this time of the year. It's well ahead where we were last year as well. So we do have very good sales right now, but the question is, will we be able to continue adding to those sales? And if we start moving lower, we could very well see some cancellations.
Yeah, exactly.
Kevin, one thing that we have going on here that I'd like you to talk a little bit about is that grain marketing update here for the University of Maryland.
Yeah, any of you on the eastern part of the country, I'll be speaking next Friday at Chesapeake College in Y Mills, Maryland, on the Eastern Shore. So if you'd like to come hear me and some other great speakers talk about grain markets, contact Shannon Dill at University of Maryland. She'd be happy to have you come to that morning Outlook conference and hear what's going on in the grain markets. Let's take a look at the cash market. And this week in particular was a pretty slow week. We talked a little bit in the middle of the week about how basis and soybeans was really ramping up. We saw a bit of that back off yesterday, and then today we saw a little bit of improvement. So it's really sort of a seesaw market along the river. Beans, moving higher, 5 to 10 cents on one day, backtracking a little bit. But overall, it was pretty much a slow week on average. Corn was only up a penny, soybeans up 2 cents. We're not seeing much movement at ethanol plants this week. We are starting to see a little bit of movement in western soybean crushing plants. We saw Lincoln up a nickel today. We saw Mankato up a nickel today. So I'm suspecting that this big drop in the soybean market may start to pinch off some pipeline supplies. So we may see some uptick from those soybean plants as they start to scramble a little bit for supplies. But right now, still pretty constant basis levels, not seeing much movement at the end user point.
That sounds fair enough. Guys, thanks a lot for tuning in. If you have any questions about what we talked about today, give us a call at 877-472-4607. Remember, if you haven't done so already, go ahead and start a free trial. It's a 14-day trial. You get access to the trading platform, the Grain Hedge trading platform on your desktop. You also get a mobile platform. You can monitor those quotes on the go and actually trade on the go too. So it's a very powerful tool for producers out there. We look forward to seeing you next week. Thanks a lot and have a great weekend.